Hello, my name is Mark Sherman from First Person Benefit Advisors. Let's spend a few moments talking about Health Savings Account, a new health plan option offered this year by Schurz to all benefit-eligible employees. A health savings account really includes two components, a high-deductible health plan and a health savings account. Let's talk about both. First, let's talk about the high-deductible health plan. Think of this coverage as somewhat more catastrophic medical coverage, intended to cover the large cost of health care and not all the daily smaller expenses that we often incur. This coverage does not have copays, so when you go to the doctor or pharmacy, you'll be paying the full cost of that visit or medication. However, since it is a higher deductible, it's going to cost you less. Less money will come out of your paycheck because you've purchased this high deductible health plan. Now let's talk about the second component, the health savings account. Think of this as a savings account in your name, owned by you, but set up specifically to pay medical, dental, and vision costs that you incur throughout the year. There are several key elements to this special account. One, it is not a use it or lose it account. Those of you familiar with a flexible spending account know that if you haven't used all your funds by the end of the year, that money disappears. Not so with a health savings account. As you put money in and leave it in, that balance grows and carries over from year to year. There are also significant tax savings associated with a health savings account. You get a tax deduction as you put the money in, it grows tax-free while it's in the account, and when the money is taken out, there's no tax to pay at that time either. Now let's talk about the eligibility for a health savings account. In order to participate in this special account, you need to have a high deductible health plan like the one Schurz is offering. You also need to make sure you're not covered by a different health plan. So if you have spousal coverage from your spouse's employment, or if you're covered by Medicare or other forms of health plans, you'll not be able to participate in this option. Now let's spend a moment talking about how we put money into this special account. The cost of this plan is going to be much less, so hopefully you'll take some of the savings and put it directly into the account. The Internal Revenue Service sets annual maximums. One significant difference with a health savings account is that you can change the amount you contribute throughout the year. If you want to start off with a steady contribution to the account and increase it or decrease it later in the year, that's all under your control. Now let's talk about how the money comes out of the account. You'll have a debit card that will give you access to the funds, and as long as you use the funds to pay for medical, dental, or vision expenses, it will come out of the account tax-free. If you have to take money out and it's not for a qualified expense, you will have to pay tax on that withdrawal and a 20% penalty. There's a very long list of items that are considered qualified expenses. For those of you that have participated in a flexible spending account, the list is very similar, though a bit longer. So let's spend a minute and talk about why health savings accounts work. There are really three reasons. One, the lower cost of the insurance. Number two, the tax savings. And third, consumerism savings. First, let's talk about the lower cost of insurance. And instead of talking about health care, let's talk about auto insurance for a moment. When we buy auto insurance, we don't expect it to pay for oil changes, tune-ups, mufflers, tires, etc. We expect to pay for the daily operating expenses as we would normally pay for any other expense. We buy auto insurance simply to take care of us in case of a catastrophic event, if we wreck or total the car. Think how much more expensive auto insurance would be if we tried to have it pay for all those other operating items. Now let's flip back to health insurance. In the health insurance world, often our plans pay for most all the operating costs that we have for our health. A high deductible plan with an HSA operates more like auto insurance. We raise the deductible and let the plan only insure us for the more expensive items. As a result of that, the cost of the insurance is much less. Now let's talk about the tax savings associated with health savings accounts. Most of us pay quite a bit in tax to the federal government, state and local, and also Social Security. It all adds up. In fact, for many of us, it's 30, 33, even 35% of what we earn. For purposes of an example, we're going to use 33% as the amount of tax that we pay when you add all those taxes together. So now let's think for a moment. If you get a bill from the doctor or a lab after the insurance company has paid all of the coverage and it says you owe $600, how much is it going to cost you? Well, it's easy to think it would cost $600, but maybe we need to change the question. How much would you have to go back to work and earn in order to pay that $600 bill? For most of us, again, using that 33% tax bracket, we've got to earn $900 in order to have $600 left after we pay the taxes to go ahead and pay that medical bill. But what if we could take that $600 and put it in a special account, in an HSA, with no taxes assessed, no taxes taken out, as we take the money from our paycheck and put it in this special account? The remaining $300 would still get taxed, but we'd end up with $200 after we'd paid our health care bills. And what is that $200 savings? Well, that's the taxes on the $600 that we have used to pay the health care expenses that we didn't have to pay. Another way to think of this is that Uncle Sam and all the other taxing authorities have given us a 1/3 off coupon. If we'll simply put money into the health savings account, because that's going into our account pre-tax, Uncle Sam is effectively giving us 1/3 of our money back. The third area we're going to talk about is consumerism. Once you have this account set up and you see that there's a balance growing, we hope you're going to want that balance to get even bigger, and you're going to want to hang on to those dollars even longer. How will we do that? Well, we need to have more conversations with our physician. Oftentimes, the medications we're taking can be substituted, maybe with a generic or maybe with another brand name drug that simply happens to cost less and is just as effective. Another place we'll look for savings is at outpatient procedures versus going to the hospital. Hospitals are very necessary, but they're also the most expensive place to get treatment. If the treatment that you need can be performed at an outpatient surgery center, that is probably at least a less expensive place to go, and often every bit as high or even higher quality than the hospital. So how about a final summary on how to make health savings accounts work best for you? We need to make sure we're good consumers of health care, look for quality service, but at hopefully lower cost. Get preventive care. Remember, we're investing in our own health now. Have a conversation with your physician. Often, if you ask for them to help you make these decisions, you can get to a great combination of quality and lower cost. Thanks for spending this time to talk about health savings accounts. We hope as you dig deeper into the details, you'll consider this as another viable option offered to you by Schurz. For additional information about health savings accounts, please refer to your Schurz Choice Benefit Guide or call the Schurz Care Line at 877-919-9355.